Good morning, everyone. So I'm recording a quick video today, and basically I'm going to go over the week, and I've logged some of the trades that my new model says to take, and I'm just going to go over that and sort of my outlook for the week going into each day. Real quick, this is the model, so I finalized it. I called it the cookie cutter. So listening to Gunna, bread and butter, and I just was thinking of a name and came up with cookie cutter. So I have when I don't trade. I've added something for take profit and stop loss. These are some of the questions I ask myself on each step. Shout out to Dom. This is his Discord. I've had this model mostly from him. It's influenced from his model. And so yeah, I just want to thank him real quick and give him a little shout out. Anyways, now go on to the economic calendar. We have red news every single day. Let me go to Monday and start this off. So you see how I explain it well over here. The bias isn't too clear yet. We have been trading lower, but we also hit a significant level where sell side liquidity is marked, which was followed by a fast move higher at the end of the day of Friday to make the high of the day. So we could be in for a reversal. So notice how we've come down to sell side liquidity. This area is pretty isolated, and it's basically a low that's spaced out. You could use that low too, and then you see how when you hit it we consolidated. So the reaction that we got from hitting this low is, instead of a consolidation moving sideways, we're very aggressive in the other direction, which usually signifies a trend. We come back, we hit a discount, and we run higher. So this is throughout the day. There are, if I look at the first step, which is where is price gravitating to, I'm obviously looking at higher buy side liquidity. So I already know that longs will probably be the better choice. So I'm keeping an eye out for them. But in this price action, there's not really much opportunity to long. London had a sweep. If I go down to the 15-minute chart, you'd see a sweep, but there was no change in state delivery, and I'll go through that. There was a retracement from the previous day high, all these relative equal highs, which did give a short, and then you could have looked for a long, but again, the long didn't have the proper entry because it didn't hit midnight open. So that's one of the rules I need. And step number 2 is to draw on liquidity, whatever I'm using as a higher time frame PD array or liquidity, to then get into the trade. You know, it needs to be beneath midnight. We need to have at least, if it's a buy, went down and touched midnight open and traded beneath it for a bit, but we don't. So there was no buys after London because we never went back down beneath midnight open. But this is the short. This is a 5-minute chart actually, just visual representation. But this is the short. You see, we have our change in state delivery from these consecutive up close candles that make the highest high, or I call it the most protected high. And we have a fair value gap as we do that, which becomes an inverse fair value gap. And we have these bearish fair value gaps, SIBIs. I use this one because this is where we close to create the change in state delivery. I could sell as soon as we close. Now, at the beginning of the week, I was using tighter stops still, but usually now I would be using a bigger stop. So I would probably try and go for something like, if I were to go on to that Tuesday, wherever it is. Oh, sorry, Monday. Yeah, I would have probably looked to get in when we close here, and then yeah, something like that. It would have had to be something huge like that, or I could have done maybe like a 40-point stop, and then would have had to target lower though. So something like this, or I would have waited to get in a little bit. I don't know. This was a very tight stop. It was already pretty low though in the move, so I mean, I guess it's okay. Doesn't really matter where my stop is though, but I want to try and get it as close as I can to the most protected high. Anyways, moving forward, this is a London. I just wanted to show you London real quick. There was no entry. If you can tell why, once we have a 50-minute sweep, right down here, we sweep that low. I can't really show, there's no 15-minute chart that I can show right now, but once we have that sweep, you can see that whatever we have here that creates the most protected low, whether it's a sweep or drawn liquidity or whatever, or near retracement to fair value gap, we need to close all the way above all these down close consecutive candles in order to change state of delivery, which doesn't happen until way later in the morning. So there was this whole sideways price action. You're not looking to trade. You're waiting for price to close up above this candle before you can start to buy. And even when if it does do that, you're going to be so high up into the range, you're not going to want to buy it. It's going to be scary to buy that. You're going to have a huge stop, and it's going to be bad risk to reward. Tuesday again continued to move higher. So now it's almost evident we're in an uptrend. It's more clear. The last 2 days have went higher. This time though, last time there was an opportunity. Once we took out all these relative equal highs, there was an opportunity to sell. But as soon as we take out the previous day high, it just continues to go higher. So the only time where I could have bought something, there wasn't even a short over here, but the only time I could have gotten into a trade that day is the London session. And maybe PM. I don't look at PM too much. There are sometimes I'll look at PM, but rarely. The main two I'm focusing on are London and New York right now, the AM session, because I might be trading London this month a couple times. So anyways, London session, we have a 15-minute sweep. So that's my drawn liquidity. That's the second step. We have a 15-minute plus sweep. And then now I just go on the 1-minute chart. And this is a 15-minute. I'm basically explaining why this isn't a valid sweep. It is a valid sweep. You can look for a trade and you would have taken a loss. But the thing is, if you measure from that high down to that low, and that's the run on liquidity, that breaker is super far from this low. So this is why I'm saying it's not really a sweep, because of how far away it is, the distance from it. And then you can also say this is sell side liquidity relative equal lows. But yeah, the distance is offsetting. This one's a lot cleaner. It's a nice run, and the down close candles, the up close candles are more so towards halfway of that run, not all the way up into the upper half. But yeah, if you technically though, if you consider this run down a sweep, you'd have to wait till we change state of delivery, close above that, get long there, aim for that high, stop at that low. We would have gone stopped out, but you would have had another opportunity. And once it closes up here, right here, it forms the BISI. Right there, then you have an opportunity to let it drop down, buy, and then hold for that buy side liquidity, make your money back. This is a trade you could have held through the whole day too. For Wednesday, price has yet to reach the buy side. Until then, I'll be sitting on the sidelines. So buy side up here, and I mean not sitting on the sideline. I don't know why I said that, but I'm still looking for this. With how the previous day has trended, we have to lower expectations. So this is one thing that I was struggling with on that Wednesday, is I was trying to trade a certain bias instead of trading both sides of the market. After price I left huge trends, and instead of continuing the trend, it took some time to move sideways. There's still a nice trade there, though, during London, with price bouncing from a 15-minute rejection block at 3 a.m. combined with a 15-minute sweep. The following round left an unusually large London range. Note later how the morning 800 hour created the high of the day and the low of the day very quickly after taking out previous day high. Whenever something like this happens, the following price action is usually very poor. So what I'm saying is that entire London session basically created the high of the day and the low of the day. And then not only that, but during the 9:30 opening, we did create a huge high of the day, way above the current high of the day, and then we went all the way back down in 30 minutes and then created the low of the day. And that range is huge. And whenever that happens, usually We already kind of did that at 7, and we do it again here. This is just very bad price action, horrendous price action. And I mean, it's okay. It's the day before NFP, so this is probably why a lot of people say don't trade the day before NFP. And I'll go through what I was looking at on that day I was streaming. I do think it was pretty good. I did a good job. But let me go through the London one. So we had a 15-minute sweep, and then we had a 15-minute rejection block. Those are 2 draws on liquidity that I can use. And then I can start to go down to 1-minute chart, look for my entry criteria, inverse fair value gap, change in the state of delivery. That down close candle to that lowest low. That's a change in state of delivery. I'm going long once we close above this inverse fair value gap. Let's say I go long at that close, and then simply hold it to that high there. And there you go. It's 2R minimum. It's good. For the morning session, my first point of interest is the previous day high, and I also have the sell side liquidity, which are relative equal lows or low of the day. Trades can be looked for at both these areas. So previous day high, buy side liquidity, relative equal lows for current day low, sell side liquidity. So we had a trade during London at 3 a.m. We have another trade over here at 7 a.m. to 9 p.m. to 9 a.m. Sorry, and then we have another trade from looks like. Well, I don't know. That looks like it's still in the 8 o'clock hour. And then we'll have another trade when we hit new high of the day. Same thing when we make new low of the day. And then there isn't really much else. You could argue this has a trade for a long, but it's above midnight open. There is a short you could argue for when it hits a new high of the day in the last hour. But we'll look at all those. So the first thing I want to look at is the 7 o'clock hour. This is when it takes the high of the day. So right here it makes new high of the day and a sweep. And you see how I made the sweep there. Yeah, I made the sweep there. And then initially you have your first opportunity, inverse fair value gap, change in state delivery, but no bearish fair value gap, so you're not taking that. Then you have fair value gap, inverse fair value gap, but when it changes state delivery, it's already all the way down here. So you wouldn't really sell that. It was 8:15 news, and it is what it is. There was no entry at that time. But when we do get to the low of the day, again, still within 8:30, you've got your trade, inverse fair value gap, close above here, change the state of delivery. There you go. And you can hold it even to the high of the day again. But yeah, I just went for 2R. We have a nice short after setting up 9:30 ahead of the 10 o'clock news, where I could have easily extracted 2 more R. And then this was a beautiful trade actually. I remember I was watching this trade on stream, and I was laughing at the fact that some people might think that right now 9:30 is opening up, and this could be a Judas swing. Now, looking at Thursday's price action, I'm just going to 5-minute chart. Look at Thursday. Technically, at where's 9:30? Wait, no, this is Wednesday. Alright, so I remember Wednesday I was looking at this trade, and I wasn't trading the model yet. I was still kind of like on the fence and not really trading anything. And I saw this and I thought it wasn't going to work. My bias was higher, still bullish, and it did need to go higher still, but it did retrace here, and I just didn't take the short signals, which was honestly it was that was a mistake. I should have taken more of the short signals. And you can see once we make a new low of the day, there isn't an entry. Change in state of delivery would have had to happen up here, which is way above the low. Would have been unreasonable to get into a trade. But this was a nice short. We have everything we need to short, and it was beautiful. Worked out very quickly. 10 o'clock news delivered it. but I remember I was waiting for a retracement, and we were still even above midnight open. So, and I didn't see a need to come down to the low of the day. So I really didn't think there'd be a trade at all for me that day, and I just kind of let this go. I was literally on stream. I was just like, wow, this is. Some people think this is a Judas swing. They're probably shorting here, but the bias is higher, and if this works, they're getting lucky. Blah blah blah. That was kind of like my mindset. But now I've taken out the bias, and I don't favor trades in the bias anymore. Overall, we have some nice trades despite the large previous day range. We also found some attractive shorts, even without trading into the daily bias direction. And the thing is, for this day, this is an absolutely terrible day. Like, look at how it's moving back and forth. This makes no sense why we need to go all the way down here and then back all the way up there, right? But there were still some nice trades. So, just wanted to point that out. Thursday is a market maker buy model that was completed in the weekly objective reach, so shorts become attractive. And real quick, I say this all the time, but notice how this candle very quickly went up and traded to buy side liquidity. I was not fooled by this in the morning. I knew we would have wanted to come back up one more time, this time with the bodies coming up above buy side liquidity, because this wick is a very short wick. Very quick wick. It's very long and inefficient. I don't think it spent enough time above buy side liquidity in order to fill enough orders at that level that it could have filled. So let's go forward. These are 3 areas of interest where I can look for a trade in Europe AM. The first is during London at 3 a.m. where price bounces off 50-minute constant encroachment. Later, price takes out relative equal lows at 9:30 to run higher. Finally, price makes a new high of the day and starts reversing to deliver a real move near lunch. I do see an opportunity in the 800 hour to have a trade, but price is too volatile to give me an entry. So the first one, visually, I'm gonna, if it would load. Okay. Wow. The first trade is a 50-minute constant encroachment, and there is a sweep too. Then you have the high of the day, buy side liquidity. Same thing here with the creating the low of the day. This is where I say it was too volatile though, in order to trade. And then the high of the day, you have another one here. We'll also look at the low of the day here for a trade. In the afternoon, I wouldn't be looking for any shorts. Even though we get above midnight open, we're in a 50-minute fair value gap. The reason I wouldn't be shorting here is because there's a higher 50-minute fair value gap that hasn't been traded into here and here. So I would wait for this to reach more of a premium. But we do have a long opportunity when we make a new low of the day there. We'll try and look at all these areas though. So first off, the London trade. Okay, as we have our sweep here, you start from this point and it's 1 a.m. So I only start trading at 3 a.m. But I mean, I guess there would have been a loss if you trade at 2 a.m. earlier. The reason I only start at 3 a.m. is because that's when London opens. So Frankfurt in Germany opens at 2 a.m., then London at 3 a.m., and that's usually around when the Asian markets close and the New York, Chicago pre-market or New York pre-market opens up at 4 a.m. So that's when like the Apple stocks and Nvidia and all that, sometimes they'll have a little pre-market and they'll have a little bit of off-hour trading. That's when that starts at 4 a.m. So there's a lot of volatility that will come in from 3 a.m. to 5 a.m. with Asia closing and New York starting to open and London markets officially opening for public trading. So lots of volatility injection, and you can see that from this chart. But you have your inverse fair value gap, and then your change in state of delivery, a little tricky, but I mean obviously you have it. If you use this low as your protected low, you've had it a long time ago. We've changed the state a while ago. We're just kind of waiting. I use a new one here, but that's just because, I mean, it's just change the state of delivery is really, really old. But I would not actually use that one. Anyways, I buy the strength as it closes above the inverse fair value gap, stop beneath that low, and then we deliver up all the way up very quickly. Something, again, you could hold for the high of the day. And these London trades are really easy. I mean, they happen to every day so far. They're really easy. You can hold them for a very long time, most of them. I'm excited to definitely trade London, but they can definitely be tricky to get into. You don't have much time. You need to be able to know what you're doing and get up in the morning and have time to wake up and you know be focused and all that. It might be tough. Anyways, this is a second trade. The entry occurred above midnight open, but the point of interest was underneath the midnight open. So second trade, and let me just see what time this is. 10:30 is when we make the low of the day, so right around here. It'll be easier if I just look at it on this chart actually, instead of showing the images, because there's a lot of places we want to look at. So yeah, first one, the high of the day, you see how it was too volatile back here. Changing the state of delivery would need to happen up here, and technically, yeah, there would have still been an entry if I were to trade. Wait, am I tripping? Yeah, there would have still been an entry. Yeah, there could have still been an entry, and yeah, I could have put my stop here and then still found 2RR, but I mean, like, I'm not gonna hold for this, I guess. Yeah, then the thing is, this 849 candle, it's not really news release. I guess if I knew there was news, then maybe I could have made a case for it, but this is not, this is just like, I don't know why 849 did this, but it was so aggressive. Anyways, we get to the low of the day, and this is where I had a really annoying time on Thursday. I was streaming this, and some of you remember, I tried to long when we took out, and this is where I was still kind of figuring out the model. Instead of you always using the safest low, I would, if we made a new lower low, I'd start to use that to have my change in the state of delivery. So in the whole time, instead of using this blue line here, right, I was using this candle up here, okay, as my change in the state of delivery. So once I had the fair value gap and the inverse fair value gap here, I went long, and I did something like this, and then it came out, stopped me out. I re-entered over here because I don't know, I re-entered with 1 micro, and I should have waited for another sweep, but then yeah, it slept, took me out again, and then I just kind of closed the charts. So this is why now I only use the protected lows. So the change in state of delivery, unless it would have made a new low, if, like, let's say here at 10:35 would have came down beneath sell side liquidity, then I can use this. The reason I'm using this here is because they made a 3-minute sweep instead, which is completely different. So 3-minute sweep would need to be, first of all, we would need to have taken a higher time frame objective, like a previous day low or a previous day hourly fair value gap, some hourly PD array, or a previous day high or low, week high or low, something like that. I would need this. Then I need a 5-minute or 3-minute sweep, and the 3-minute sweep needs to be at least 5 candles. 5-minute sweep doesn't matter, it can be 3 candles. So you see how we have an impulse run higher, we can make a new low beneath this, and we sweep that. At the same time, we've taken a higher time frame liquidity, so I have everything I need to kind of get into a long from all the way up here. But the trade I should have taken was maybe like, it would have been hard to figure out where to get into this, because my stop would have needed to be here, and then my entry would have had to have been once we close above that change in the state delivery. If I entered all the way up here, that's a huge stop, so I would have had to wait for it to come back down, and best case, I would have probably waited for that second sweep. It would just been hard to wait for that, to tell myself I'm gonna wait, and that's kind of why I would have probably ended up having a tighter stop anyway, and then gotten stopped out here. So this is a very unfortunate day. I took a loss on that Thursday when I had the right idea, and then I was off the chart later, but there was more to trade later in the day. So let me just keep going back on my notion. Yeah, I explained the second trade. This could have been a good trade. And then I journal how I lost, but this isn't my journal. This is like a record of the trades. So the third trade happened during lunch, macro 11:50 to 12:10. Some discretion here is used to squeeze an entry within those times. So initially my I would trade until 12, but there is a macro from 11:50 to 12:10. And if ever I'm in a situation where there's a couple minutes past my entry and I think it's good, I might take it. I'm definitely not going to do it ahead of 9:30, but never taking a trade ahead of 9:30 again. Sometimes they work and sometimes they just don't work. And when they don't work, I can't really explain why. But yeah, 12:10 is like the most I'll take a trade until that's still 11:50 to 12:10 macro. And then there's the afternoon session at 1. So, but you have everything you need to trade. It's a really nice trade down to the sell side liquidity. Another afternoon trade once the low of the day was taken, but this loses. So this would have been the first, like, you could argue Thursday morning would have lost. So this wasn't really good. To be honest, I might actually not trade the day before NFP. Just because, and yeah, FOMC and CPI aren't that bad, but days before NFP have always been pretty bad for me. But that's something I'll figure out through time. Anyways, that's it for Thursday. Now we're on to Friday, the last day. I had a pretty good trading day here, so I'm excited to talk about this day. But price surprised me really, and then continued to close higher and really refusing to go lower. It overlapped the entire previous day body, previous 3 days really. It's bodies. So there was a lot of volatility Friday, and it was unemployment rate that got released, so there was lots of volatility. But price, what I say here is price has come down to discount and made a low inside the inverse fair value gap. So I'm talking about this 4-hour fair value gap. And the reason I'm highlighting this one, and I picked this one, is because one, my eye spotted it right away. I was looking for the first PD array underneath discount, and that's the hourly fair value gap or some of these order blocks. So I used that. Okay, this isn't nitpicked. It kind of is, but I mean, like, it's the first PD array underneath 50%. With the midnight opening, and in fact, it wasn't really willing to dig beneath to seek more discount. It's kind of telling you how expensive it wants to be, how much people want to buy it, or how much how the algorithm is looking for orders at a more expensive level. With the midnight opening being found in deep discount, I can't take longs. Even if I get to a point in the day I'm confident we will continue pressing higher. However, I'll still look at possible trade ideas. And this is something in the Discord I'm in with the people who were kind of like debating this a little bit. Not really debating, but some people we're still taking the longs, even though we're way above the midnight open. Because if you look at what the day did, we really just opened up and went higher the whole day. So at one point, it becomes kind of evident that we're not going to go back beneath midnight open, and you kind of just ignore that midnight opening rule. Is what some people were doing. So yeah, I'm still gonna talk about long opportunities because the pattern's there, but I'm not gonna take them. One of the things I'm gonna do is respect the minute open. So it might mean less trades, but and I miss moves, but that's okay. The key level that had my interest was the hourly order block drawn on the chart. We had good opportunities for shorts both times. Both times the hourly chart made a sweep higher, and London lacked direction and expansion until an odd time at 5 o'clock, 500. So you see how London kind of moved sideways until 5 a.m., where it really started to act up a little bit. The candles started to get more noticeable. So that there was just nothing in London to take. And that makes sense because there's unemployment rate at 8:30, so it makes complete sense that there was nothing to take there in London, and it looked like this, just kind of like sideways price action. I mean, if you look at whether there's a trade or not after 3 a.m., you have my point of interest hourly fair value gap. So as soon as we hit it here, we just don't get a change in state delivery. We get a change in state delivery here, but that's at 4:30 a.m. and we have a fair value gap, inverse fair value gap, and the trade does work. I just don't think it's beneath midnight open. if I'm not mistaken. Yeah, it's above midnight open. Sorry, so you can't really long, right? There's no shorting opportunity, but you can't really long either because we're above midnight open. You do see though, if you had tried to long and you didn't respect the midnight opening rules, there would have been a window. Right? It doesn't mean that you shouldn't respect the rules though. So this was a beautiful short at 9:30. There was no inverse fair value gap formed earlier in the 10 o'clock hour, but the trade still came only a little later after sweeping that high and creating the first hourly sweep. So I'm talking about back here, there was a change in state of delivery. There was an inverse fair, no, not really an inverse fair value gap. There was a bearish fair value gap, but no inverse fair value gap. So until down here, right? And then it would be too late to go for a trade. But then when we do come back a little later and sweep the hourly high, this is an hourly sweep, plus there's a higher time frame PD array. Okay, then you do see everything you need to get into a short, and it's a really nice one too. Works out very well. You could aim for that low or the fair value gap. Doesn't matter where you aim, but remember me, I try and put my stop above all the PD arrays that I'm using to get in, and closest to the most protected high. Sometimes though, when it's closing far away from the change in state delivery and beneath lows, then it's understandable to have it makes sense to have a smaller stop loss. But if I were to show a different trade, then sometimes like the trade on Thursday, or like this trade actually. This is a good example. The reason why I'd prefer to have my stop at this high for this trade is because we don't really show much speed and aggression, and we don't completely make new lows, and versus here where we are showing speed and aggression. We're closing far beneath all the lows, while here we're still above this low when I get in. Well, I got in a little late, but for this trade. But let me go over what I was kind of looking at. So this is a long in the afternoon where we have a sweep, we have a higher time frame PD array, and then we have fair value gap, inverse fair value gap, change state delivery. But again, above midnight open, even though this still worked pretty well. And then the interesting story about this trade is we do have another hourly sweep. We have the high of the day buy side liquidity being taken out. So going down to the 1 minute chart from this point, you just wait for your change in state delivery. You have your inverse, you have your fair value gap. I was actually at 2 supposed to go to the gym. No, at 1 supposed to go to the gym with someone. I was late. I got there around 1:15, but the other guy was also late, and he got there an hour later. More than an hour. Like he got here at like almost 3. It was almost 3 o'clock when he got here. So I had to wait for an hour and a half. I just decided to trade and do some studying and listening to music. I didn't mind. There was some nice tables there anyway. And it wasn't planned anyway exactly what time we were all coming. But we had an idea initially at 1. I came late, then he came a lot later. And I just kind of ended up sitting there and trading. And as I took this entry, he pulled up. He got to the place, and then he was looking for me, and I was in there getting ready for trade. Saw him walk by me. I didn't signal him or anything because I was still waiting for the entry. And then he came up to me. We called me, told him where I was. As he came up to me, I took that entry. So I didn't signal him because I realized a little later that my alert got hit, that we had changed the state of delivery, and my alert got hit. And then that's why I don't enter immediately, because I wasn't fully on my phone. I was kind of walking around in a public place. So that's why the entry is a little late. And then closed it down here after we hit the sell side liquidity. What happened though is, instead of working out, we were going to work out with another dude that was going to come even later at 5:30. So we decided, fuck it, let's go to the library from 3 to 5. We went to the library, and he was interested, he had been interested in learning to trade. So I started teaching him how to trade at the library. And as I was showing him the entry down here, this one was playing out. And then I got him to, we went through a lot of price action. I got him to spot the entry here. And then as it worked, showed him that I took this trade in front of him as I was teaching. And it was completely unplanned. Like, I hadn't planned for it at all. It was just a paper trade that I took. I was just messing around, had time to kill. And yeah, that was pretty nice. But anyways, that's really it for this week. I'm excited to trade this model, and I mean, I'm sure I'm gonna do it wrong so many times. Obviously, if I were to go back in time, I don't think with this model, I don't think I would have gotten every single trade. I would probably taken more losses. But that's why practice makes perfect. So I'm excited to do more videos like this, and streams where I backtest too, different months of price action. And if anyone has any suggestions or would like to see any certain special type of content, please let me know. Please like the video. Really enjoying making these, and I will see you all next time.